Hello, my name is Washboardjim. I am the founder and creator of the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And I'm going to kind of signify my trading strategy, how I use the chart patterns, the moving averages, and how I get into a trade in the morning and how to trade them. So we're going to get right into it. This is my little setup here. What I'm going to be talking about today, it's going to be the moving averages, and it's going to be chart patterns, and it's going to be about how I look up a trade in the morning and how I get straight into it and get my first scalps out of the way, and then kind of monitor the market after that. Every stock is going to have a point where it hits a resistance and pulls back, or it pulls back and it's going to create a pattern. And when I'm talking about patterns, I'm talking about these patterns right here. I got 16 of them up here. And the continuation patterns and reversal patterns for bear and bullish markets. So a snake is a long trend line that goes downward, a sell-off, and then spotting the reversal and taking the trade. So first you're going to have like a big long pattern that goes down, and it's going to, sometimes it'll create a falling wedge, sometimes it'll just be a straight knife all the way down, and then it breaks out of a channel. And I'm going to try to show you some of them when I get to it in here. But for right now, what we have here is a descending triangle, and I want you to study, copy and paste this, look it up, do your homework, and study each one of these chart patterns. We've got a bearish flag, bearish wedge, symmetrical flag, continuation to the upside. We have an ascending triangle. We have a bullish flag. We have a bullish wedge and a symmetrical flag. In reversals to the downside, we have a head and shoulders, a rising wedge, a double top, and a triple top. Now in the reversal from the bottom, we have an inverse head and shoulders, a falling wedge, a double bottom, and a triple bottom. And if you learn and memorize these chart patterns and look for them throughout the day in different time frames on how you like to trade, if you're a swing trader, you'll go into bigger time frames. If you're a scalper, you'll use the 5 minute, hour, 5 minute, 15 minute, 1 minute. And we're going to go through the different time frames when I show you these moving averages. But these are the patterns that I'm looking for when I'm getting ready to take a trade. Next, the moving averages, and I have them labeled right here. A simple moving average, SMA, meaning the simple moving average is closing price of an asset over the past number of periods. It's a slower moving average. EMAs, meaning the EMA is a type of moving average that places more importance on the recent price activity, which makes it more sensitive and to current market conditions. So it's a price action, to where the other one is a period of days throughout. So it's a slower moving average, but I have them both in my time frames. A lot of people just use the EMAs because they're scalpers and things like that, but you want to use them SMAs too if you're a scalper also. And I'll show you if we can come across some charts on ideas on how to use these moving averages. So I'm going to give you the colors of each moving average. Now this is my setup right here. I have the RSI on here, 1470.30, and then I have my moving averages. And get your pencil and paper out, and I'm going to give you the color of each moving average that I'm talking about. So we've got the 21 EMA, that's the white one. These are just my colors. Now if you're familiar and you already have colors for yours, then use yours. But if you want to follow my strategy and you watch me on live on YouTube or you're in the room, you might want to try to indicate the same ones that I have. The 63 EMA, which is red. The simple moving average of the 200, which is a gold. We have the EMA 9, which is the fluorescent blue. We have the EMA 200, which is a dotted yellow line. And we have a simple moving average of the 50 SMA here with solid green. So let's go over these again one more time. We have the 9 EMA, which is in a fluorescent blue. 21 EMA, which is in a white. We have the 63 EMA, which is in a red. We have the 50 SMA, which is in green. And the 200 SMA, which is in a kind of a gold or a dark goldish tan color. And then we have the 200 EMA, which is in a dotted yellow line. So we're going to go through some charts now. And each one of these moving averages I use as support and resistance levels. Or if I want to get out of a trade and it hits like a resistance line, it hits the 63 or the 50 SMA, I want to get out of the trade or get into the trade. Same as the 200 SMA, the 200 EMA. These are all good moving averages. I've been working on them for 21 years, and I think I got them down to a fine art. And if I learned something new about a moving average, then I'm going to go ahead and talk about it. But this is all in the 1 hour time frame right now. As long as we stay above the 9 in the 1 hour, we're still bullish. So we could come back and hit that 9 and bounce up off that 9 on the 1 hour. So I'm going to erase these two things on here. Just might as well erase them all. I can just tell you as I go on. How Washboardjim uses his EMAs and SMAs. So we're going to start off with a weekly time frame. And you see how the entity has stayed above the 9 EMA here. So let's say you're a swing trader and you wanted to buy it on the dip. You'd buy it every time it touched that 9 EMA on the weekly time frame and get a good bounce off of it. Once it goes below that 9 EMA, it could come back and see the 21 EMA. So all this time I'm looking for confirmations that maybe it could pull back and hit below it or something. For example, like we had a triple quad top breakout right here. So I'd take my trend line and I'd run it to that wick right there, or use the body sometimes to that wick right there. See how we pulled back? Once we had the triple breakout, we pulled back and hit that trend line of that triple top, quad top, support, support, support. It hit 3 different times in 3 different weeks and held, and then finally broke out and stayed with the 9. So if this thing didn't hold the 9, I'd want to look for another place, like right in here. There's a little trend line right there. I want to look for a confirmation, and I'm going to put just straight across. So I have a confirmation of a triple top breakout, 3 different weeks, and it pulled back, respected the 9, respected the 9, respected the 9. I mean the triple top breakout, and then respected the 9, kept going on up. So that's one way, and this is also a head and shoulders. You've got an inverse head and shoulders right here. So you want to take and run your little trend line from that all the way to that right there, or even up to this one right here. So I'm using chart patterns. I'm using the inverse head and shoulders. That's a big old head right there. Then it stops right there at the 50 SMA. So if we got into a deep sell-off, and I see this inverse head and shoulders right here, and it's above that 50 SMA, I might want to think that would be a support if it broke below this here quad top, triple top, because that's a pretty solid support right there. 1, 2, 3, 4, boom, she broke out, she came back. What always breaks out comes back and retests the old resistance level, and that now becomes support. So as long as that stays as support, that's still bullish. So I'm using these moving averages, like the 9 would be the first one, the 21 would be the second support, and then the 50 SMA off this here inverse head and shoulders. There's your left shoulder, and then your right shoulder. Could come back down and hit that. That right there, and be a solid support. So let's erase these. Let's go to the daily. Now here on the daily, you came back and you touched the 50 SMA almost 2 times. So if this thing ever, and we had an all-time high last Friday, created an all-time high. So that previous resistance right there would be a solid support coming into next week. What was resistance, what was the all-time high, now could become solid support. And I use the body of the candle, not the wick. I'll use the body of the candle. And you can see we almost touched it here, and it just never, once it broke it, it pulled back and hit the 50. It took a couple of 3 days. That retest right here would have been a solid buy. Using that body right there, I would have took that trade. And I probably did. Just go to that body right there. You got the wick touching the body right here. You got 2 bodies right here. So I'm getting confirmations that that's a solid support. And then we hit it again. And this time we hit that support level, that support off the 50 SMA, and I would have took that trade right there on the daily. So I'm using the moving averages for support levels. And then what usually happens is they'll like to repeat that. So this, if it does get into a hard sell-off, we'd come back and hit that 50 SMA. I'd be pretty much wanting to go ahead and take that trade and see if it held. If it held that 50 SMA, I'd want to run it back up and try to run it up here to the 21. I'm using the moving averages as support and resistance levels. And once you look at them and you keep looking at them, you'll see what I'm talking about. For example, right here, we had the 9 hit here on the daily. The 9, the body. I'm using the bodies of the candles, not the wick, on the daily. The wick is a confirmation. The bodies is definitely a support level. It's more positive, more guaranteed to be a solid support than a wick, because the bodies are usually the ones where at the close of the day or the opening of the day. And then we got body, 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 wick, 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 body, wick, body, body, wick, 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 body, 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 body. So above that 9, that 9's been a solid support for how many weeks? 1, 2, 3, 4, 5, 6, a month and a half, 2 months. As long as you stay above that 9, so that 9 could be a solid support on the daily. And I would take that trade, or I would see if it, where you had this here resistance, you had body, 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 almost 4 bodies in a row right there. So I'd want to take it to the highest point of them bodies and draw a price line. If I came in Monday and we pulled back and hit that second support, we had this resistance here, which is your first support, and then 4 days of resistance right here. And then your third support would be the 9, unless it just automatically went down to the 9 in that one day, and that can happen. We could come in Monday and this thing would tank to the 9 and then bounce back up and break old resistance level up here where that body, not the wick, I'm using the body of the candle. 69.93.13 on the SPX. So then I use a different time frame. I use the hour. The hour is a very reliable source. I'd use the hour time frame and see if it held above the 9 on the hour. Come in here Monday. Now, see, that would have broke support for the last for Friday's trade. So I'd have to hold that body right there as support level. And if that didn't hold, we could drop all the way back down here to a double bottom and hit that double bottom and be a very strong buy come Monday. If it held that, started moving up, like you have a snake or a channel go down, and I'll show you the channels as we get into smaller time frames. And I'm still using the 9 for support level. And if that doesn't hold, it could be the 21 EMA. So we go to the 30 minute. I use all kinds of different. I've been labeled as a 1 minute time frame guy. That is when I'm scalping and I'm looking for chart patterns, moving averages, and get into the trade off these chart patterns that I can identify on the 1 minute that you can't identify on a 5 minute, which you could, but I mean, they're not as exposed. And they're not as exposed on the hour. They're more or less relying on candlesticks. The bigger the time frame, you more or less rely on a candlestick pattern than you do on a chart pattern. See, like here's a big snake right here. Now this is on the 1 hour time frame, and we let out with 3 white soldiers. And that's a bullish with a tweezer bottom. And that was on Wednesday. And then we had the big breakout. So, support would have been either right here for the day, right on the body of that candle right there on the 1 hour, which we did almost hit at the end of close. See how we held that? And if that doesn't hold on the 1 hour, we could easily come down and hit the 21 or hit the double bottom that we had at opening price on Friday for a support level. And if that didn't hold, you got a gap fill. You got to worry about a gap, and you got a triple top right here on this gap, which is another support. Like I said, on the triple top is a bearish indicator. Sometimes they'll break out, but as you can see, this triple top right here pulled back into close. So I would have got out of that trade, especially on a heck of a day like that. Come back and we landed off the 9 and created a support level on the 30 minute, and it jumped on up here. And then you start dealing with this time frame. Now, if that didn't hold, you'd have a gap fill down here at the triple top support, and you'd drop price line all the way across. And then eventually your chart's going to start getting all lined up and stuff, and you want to kind of clean it up and start over again, start fresh. So then you got the 15 minute. Now we're getting closer to the scalping periods. These are day trading time frames. That or swing trading. So the same thing here on the 15 minute. It was definitely that double bottom right there, which runs right into the 50 SMA. And I'm using, and the lower the time frame, the stronger I use these different moving averages as support levels and resistance levels. Also, I want to identify something here. When you have the 9 EMA cross the 21, that's a bullish indicator. And then it just respected that 9 all the way up and hit that 21 once, or hit the 63 EMA, which happened on Thursday. And I would have took that trade if I was looking at the 15-minute time frame. But I want to keep in mind what time of day it is, being in the now. Is it a bullish or bearish market? There's a lot of bad news coming out, a lot of fat cats. Are they being very negative? Or is the trend a downward trend like it was on Wednesday? And we had 3 black crows right here, 3 candlestick patterns, which is a tweezer bottom indicator, and I would have took that trade in the middle of the day. And then we had a hammer right here, and it didn't last too long. It bounced up a little bit, but it failed. And it didn't fail, and it failed the 200 also, so that, that was a pretty tough trade. I would have took that and got stuck in it and had to buy and add on to the dip off these 3 white soldiers, 3 black crows. with a tweezer bottom. We have a tweezer bottom here off the 63. We have a tweezer bottom here off the 9. It all depends on the time of day how I trade these stocks. If I'm scalping early in the morning, I use a smaller time frame, but yet I could still use a larger time frame to see if there's some kind of setup off of a moving average or even off of a chart pattern. So we got a double bottom right here, right into close. Now, it would have been too late to take that trade, but let's look at the 1 minute just for a second. Yeah, see, there's no time to take that trade. And I took this Friday and lost. I had ended up taking a loss, and I had, I think, 10 days straight of green trades without one loss at all. So I was able to eat that one. That wasn't that much. It's like $150. And I got out of the trade because it was so close to the end of the day. I said, I ain't taking the risk of losing more money. But you can see the 9 crossed over the 21 right here. And then we disrespected the 9 all the way down. So it was a bearish end of the day close. Now, if we'd have bounced above the 9 and stayed above the 9, I would have felt more bullish. I'm using the moving average as a resistance level. And if we would have bounced above and had a candle, 5 or 6 candles above the 9, I would have become bullish. And this is in the 1 minute time frame. So we went to the 15 minute. Now I'm going to look at the 10 minute. 10 minute, all day long, we more or less held above the 9 and just once bounced off the 21. We had a triple bottom right here. 1, 2, 3, tweezer bottom off the 9 with 3 white soldiers, which means that's more or less a bullish day. And then it consolidated the rest of the day all the way across. So I would have went to a smaller time frame and tried to scalp that trade. Then we had 3 black crows into close right off the 50 SMA. So we'll find out if we come in and we open at off the 63 on the 10 minute or the 15 minute. I want to look at the 15 minute. We could easily jump down and hit the 50 SMA where that double bottom is if we do not hold this support level right in here. And that's right where I have that trend line. That's right where we closed at. So if we don't hold that support level, I have a good idea that this thing would pull back and hit the 50 and be a strong buy come Monday morning. So we got the 5 minute next. A lot of people use the 5 minute when day trading or swing trading or trying to catch an idea. It's a lot more cleaner for some people. It doesn't show me as much patterns as I'd like to see in a trade, but it does give you, and you'll take less trades than you would if you're using the 1 minute. So we had 3 black crows right here with a hammer, and it bounced on up with that hammer. That hammer was the body of support, so as long as you stayed above that, you could still stay in the trade. Then we had a head and shoulders right here and tweezer top, and she pulled back, and we had another hammer again, holding up that support level that I had. And it bounced on up and broke the double top. By this time, if you're trading the SPX, you might be up $120, $200 on this here contract. And if you got 3 or 4 of them within 6 to 5 minutes, you made $500. And you're done for the day. You're out of there. You held support here, triple bottom. We hit the 21 once. If I'd have saw that, I might would have took that trade. Then we had another sell-off with a tweezer bottom here. Then we held the 21 for a good half hour. Then it came back and hit the 50 and bounced up. And then you came back at the end of the day and hit that solid support that we had earlier in the morning off that hammer. So I'm using these, and then you had the negative with the 9 crossing down over the 21, and you're bearish because you're always below that 9. And that's on the 5 minute. Then on the 1 minute, you have all kinds of trades you could have been taking. Here's a snake right here. This is one that I talk about a lot. Let me pull this up here. So you see this pullback right here. You're looking at a double bottom. So you got out of this trade here at the triple top. She pulled back and then she ran up a little bit, found some resistance, and then became negative under the 9. Then all of a sudden you had this big old candle come in, and you're going, and it bounced out, and you're going, okay, I'm going to draw my snake in, which is the channel of support. So it started to hit that resistance level and then came back. Then all of a sudden you seen, oh man, we got a head and shoulders right here. So there's your left shoulder. There's your right shoulder. So it more or less came down, hit the resistance line again, and then stopped and created a head and shoulders with a hammer, and then finally broke out and jump out of that trade. And there you go. You got a head and shoulders. And then you create another head right here, and you got another head and shoulders. On the 1 minute, you got another snake with almost a tweezer bottom right here. And we're bearish as long as we're under that 9, but once we broke above the 9, it came back and created a right shoulder off this left shoulder. And you could have got in that trade, run it up, and made about $40-50 a contract using the SPX. Now these are on different tickers too. So I'm using the moving averages, and they're all popular. They're all popular. But we never did come down and touch the, let's say if we had a real hard sell-off, this thing could have come down and hit the 200 EMA, and I would have went in small and seen if it started to break out. Or I would have added on if it dipped down and hit the 200. So let's look at the SPY. And I'm being in the now. I want to know, I'm bullish in this market. Although all the negativity you get from the fat cats. I've been trading for a long time, 21 years every single day. And I'm used to the rhetoric. Now we had high inflation under the Biden regime. 21 to 40%. I run a business. I know exactly what I'm talking about. I go out and buy groceries. And I went to the meat store and my chicken doubled. My eggs tripled under the Biden regime. Now they've come back down, but not the meat. The meat's still up there. But let's say we're looking at the SPY. I took the SPY here off the 200. So we're going to clean this up. I'm sitting here waiting all day, and all of a sudden I see another knife, another snake right here, and we came back and we hit that 200 EMA right here. And then I'm looking at all these other trend lines, all these support levels, and then I'm kind of doubling down and looking at a double bottom right here. I'm also looking at a triple bottom. So let's say first I want to draw a trend line from here to right there. Support, 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 support. And I had a confirmation that we hit the 200 EMA right here, and I would have definitely took that trade, and I think I did. But every time we came down and hit that support, there's a triple bottom right at open. 1, 2, 3. I go back to that chart pattern. Triple bottom is a bullish indicator to the upside. So it came down and had a triple bottom right there. Learn these patterns. So we had a knife. It came back and it hit that quad bottom. We had a knife right here, read it open, triple bottom, boom, bounced up, and I got out of this trade at a double top. There's your double top right there. This is all in the 1 minute. 1 minutes are easy to read. Some people just don't have the patience, but they're a lot cleaner to me, and they show more chart patterns. They show more candlestick patterns, and I can read into them. So I've been working them for a very long time, and I kind of know what I'm talking about. So we had a triple bottom right here, bounced up to a double top, get out of the trade. Right there on the SPY, you might have made 40, 50 bucks a contract easily first thing in the morning. Even if you'd bought them at, let's say they were at 90 cents, you bought 10 contracts for 90 cents, which would have been $900, and you sold them for 25, you would have easily made $250 in less than 5 minutes. Came back and hit the 50. You had another snake, a little pullback. Respected the previous resistance level right here. You see that? You had a triple top break. There's your triple top break right there. And they came back and respected that triple top off the 50 SMA. I would have took that trade and sold it up here at a triple top. So you had a triple top here, support level, which now became support, and then you sold it up here at another triple top and got out of the trade. And then she pulled on back again. Now you got a quad bottom. So if you can count to 4, you might make a little bit more. So I'm counting to 4 here, and I see we touched this trend line 4 different times with a hammer. I would have jumped on that trade and sold it up here at a head and shoulders. There's your head and shoulders right here. You got your left shoulder, your head, and your right shoulder. Now I'm going to draw a price line across. I'm going to draw a price line across that shoulder line. I'll show you something else. So we came up and we hit that shoulder line, which is the right shoulder. That's why you trade head and shoulders. There's your head and shoulder right here. So you got your left shoulder, come up, you got your head, and when it came back down, it created a right shoulder. So you know that that's an exit idea. That's a head and shoulders. So I got this head and shoulders support now, resistance level. We came up the second time, and I always talk about the second time. That's the time, if it's going to break, it's going to do it now. If not, it's going to pull back hard. It broke the second time. Boom. Then it came back and respected that shoulder line of that head and shoulders. Support off the 63. Support. Then the third time, it dropped down and hit the 200 again. We hit the 200 here. So at the end of the day, you jump in that trade, scalp it up here to another head and shoulders. There's your left shoulder, head, and your right shoulder. All in the 1 minute. So you got how many trades here? You got 1, 2, 3, 4, 5, 6, 7. 7 trades. Maybe you'd have took it even off the 200 right here and added on, that's 200 SMA and added on the 200 EMA. So I've got these moving averages just where I like them. Now there's going to be one that's going to come up and I said, wow, that's how I found the 200 EMA. That's how I used to trade the 50 EMA and then the 51, and then I found out that the 63 was much better to trade with. And I've been in rooms where they've never heard of the 63 EMA. I've never heard of it. I mean, seasoned traders. I picked this up off a guy on Schwab. I was listening to him. We never stopped learning. So chart patterns, moving averages, and being in the now. And when I'm coming in and I'm looking for a trade, this is going to be my setup. We'll get that set up here real fast. So I got this set up on the 1 minute. This is the SPY. So we create what you call an orb. That's another support level that I'll use throughout the day, and resistance level. And I'll go to my watch list. First trades I look at every single morning will be this setup right here. I'll look at the IWM, I'll look at the QQQ, I'll look at the SPY, and I'll look at the SPX. Usually I have my support lines already drawn on here, where I think that we're going to hold, and if we're not going to hold, and I'll use the 5 day, 5 minute. I'm always setting alerts. So I'm going to come in here Monday morning, and I'm going to tell myself, well, we need to hold this here support level that we had on Friday. So I'm going to put a price line right there. Now, if we come in first thing in the morning, it holds that beginning price line that we had on Friday, and we hold the 200 EMA, I might be wanting to jump in this trade. Your next support is on down here. We had resistance right here, and we had resistance right here, and we had a triple top breakout. 1, 2, and then she broke out. So that'll be my second support, which is off the 200 SMA. That's solid. I mean, that's as low as I want it to go, or I'm going to have to look down here for a different pattern like this inverse head and shoulders right here, or this yin yang. We've got a triple top breakout right here, so the next support level is going to be right around in here for the next day, and then we have that support level right here. So I'm going to kind of just find an equilibrium. That's going to be my third support of the day on the 5 minute. And I'm using different time frames. You know, I'll go all the way back to an hour, and I'll do every one of these charts like that. Now, sometimes the IWM trades different than these three do. The QQQ, the SPY, and the SPX. But these are my two main trades. And then I just kind of trade this if I'm in the mood, or if I see something that's unusual, or because sometimes these might be down and your IWM might have found support and be bouncing up, or vice versa. And I don't trade the QQQ that much, but I do have it on here just to tell me, okay, well, this got support here off the 200. This has got it off the 200. And maybe this could be a good trade to be taken. These are on the 5 minute. Now I'll change time frames. Later on the day, I'll be looking at the 1 minute. Say, well, we're at resistance. We can't be breaking this 200. SMAs was the last resistance we hit. So if we come out breaking that 200 SMA, we could come back up and start moving for a pivot. There's a pivot point right there. You got this support level, and then resistance, resistance, support, 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 resistance, resistance. So I'll put my little price line right across that and match up with them. That'll be my resistance for the day. If we break that, we could start to move higher. Maybe hit this head and two-headed snake up here. Left shoulder, head, head. Then come back up long at 250. And that'd be my next resistance. Or I'll go with a trend line. I'm using chart patterns, trend lines, and moving averages. So we had resistance, 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 resistance. And that could be your hard resistance to break to get me into a bullish mood And once it broke that, then I'd say we have more of a chance coming up here and maybe even doing a double top by the end of the day at 250. Chart patterns, double top. Those are maybe my 3 resistance levels to break once it broke that trend line. We got a double bottom right here. Bounced off a double bottom and run into the 200 EMA. And the 200 EMA and 200 SMA are very strong for me when it comes to wanting to take a trade or get out of a trade. Very strong. Same as the 63 EMA. Right here, came up and hit the 63, pulled back to a double bottom, then came up to a double top and broke out. Held that 63 as support. Once we broke past it, it came back down and respected that 63 because it was respected over here before. I've got something in my nose just kind of itching. Let me get a drink of water. So I use moving averages for resistance levels and support levels, exit ideas, and entries, along with a chart pattern, along with a trend line, and along with news. Let's say we had one that had a real nice breakout. Sometimes I take less trades because I'm afraid to jump in them knowing that maybe this sucker might just automatically knife on me and I get stuck. I have a lot better odds of buying the dip, like right here, and taking it at a double bottom, and then trying to jump in it on a breakout, and then having it pull back on me. So I'm always looking for a good support level. Here we had a triple bottom, but it was still pre-market, and you see it didn't hold. Then it came down and created a double, hit the 63. Now, I know that the 63 is a resistance level that needs to break. Once it breaks it, we can start moving higher. Her nose. So that's it. I think I'm just trying to go over it over and over again. Once you get accustomed to your moving averages, let me pull it up here again. Chart patterns, moving averages, and being in the now. There's different time frames in the day. You got your first hour and a half, great for scalping. You have a lot of momentum, a lot of volume. People take off, call it a day after that. Then your chart patterns start to show up after that. Your setups start to show up. So maybe you're not a good scalper and you don't read candlesticks that well, or you just like to wait for things to calm down. There's traders that wait for things to calm down to start taking trades and look for the right setup and only do 1 or 2 trades a day. It's all you need is 1. But I'm doing 6, average of 7 to 8. Then on a good day, I'm doing 11 to 12. And then on a poor day, I'll do 3 or 4. When I just don't feel it. It's, once you become a seasoned trader, you start getting it in your blood and you just get that feeling, if you know what I mean. So we've got the EMAs. Let's go over them one more time, and then I'm going to call this a day. And I hope you enjoyed this video. If you have any questions or comments, please hit that like, subscribe. I'll be on here for a little longer. I don't know how much longer I'm going to be trading live, because I'm getting to the age where I want to retire and kind of enjoy some time. I'm 64. I could have a stroke and then not be able to trade at all. So I want to try to enjoy life for about 10 years before I get real old. But we got the 200 EMA, the 200 SMA, the 50 SMA, the 63 EMA, the 21 EMA, and the 9 EMA. And the EMAs are the fast and moving average for day traders and scalpers, and the SMA are more of a period time frame of 10 days to 20 days that are also good when it comes to looking in different time frames. Use them all in different time frames. Learn the chart patterns that I talked about, plus more if you find some on the side. But these, you copy and paste this or look up what it says here: bullish, bearish chart patterns cheat sheet, or continuation reversals. And when you see a chart pattern, Google it. Go to image and see how many times they respect these patterns. A lot of people don't trade patterns. They're here and they trade blindly. Or they use indicators that are computer generalized. AI is going to be doing your trading here in another 5 years anyway. You don't have to know much at all. But I've been through it all. So that's it. I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And have a great day. And hit that like button. If you have any questions down below, put them in the comments. I respond to every one that I can see until the video starts to get old and they don't pop up on my screen. And subscribe and hit that bell, and you'll get all my future updates. Have a blessed trading week this week, and we'll catch you later.